Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, Joe Biden launches new offensive to hold on to presidential nomination. As well as that, Sequoia Capital's former China unit raises new $2.5 billion startup fund. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Joe Biden. Now, Joe Biden has now launched what the FT is calling an aggressive effort to hold on to the Democratic presidential candidate nomination. This comes following his very recent letter in which he insisted allies and others in the Democratic establishment that he was not going anywhere. Now, of course, this has been the topic of interest recently, especially within, the kind of genre of politics. Now, politics, of course, recently has been, highly relevant with the European parliamentary elections. And then, following that, of course, we had the first round of the French parliamentary elections. And then followed by that, once again, we had the British general election. And then after, of course, the French second round of voting. And now we have the result of all of those such elections. But the next kind of election that we've been talking about is, of course, the US presidential election. And that's the kind of election which we've actually been talking about for far longer than those that we've just mentioned. But I've said election many times, so we'll cut to the chase. Now, Joe Biden essentially has been falling back in the polls, especially following his debate with Donald Trump. Not last week, but maybe the week before. I can't grasp the exact date. Sorry about that. But ultimately, yeah, Joe Biden is falling back in the polls, and therefore he's now trying to convince his party, the Democrats, that he is in fact fit and strong enough to take on Donald Trump and basically push for victory against Donald Trump this presidential election. Now, prior to this debate, previous to that, ultimately Biden was already lacking in the polls. Ultimately, most voters were saying that they trusted Trump more when it came to the economy, despite possibly Biden's efforts to sort out the economy, which in his term definitely worsened, but now has come back down to certain levels that some would call tolerable, and therefore many are kind of looking to Trump as their way to get themselves out of this economic situation. And as we know, kind of the state of the economy is that kind of key indicator, that key factor which drives voters to vote one way or the other. And that's why essentially with this kind of world economic situation of high inflation, lacking growth, and ultimately kind of geopolitical instability, which is affecting the economies in different ways as well. Ultimately, that is why, like we've seen in the UK, with voters shifting to other parties apart from the kind of the incumbent party of the Conservatives, moving away from that. The large reason for that is ultimately the economy, and that is ultimately what we're seeing also in the US, and arguably it's also what we've somewhat seen in France and in the European parliamentary elections as well. Ultimately, though, the kind of key issue that was noted in the debate between Joe Biden and Trump was, of course, Biden's health. Now, Biden is getting very, very old. It doesn't take an expert to say that. It's just plain facts and simple. And ultimately, do you really want an elderly 80-year-old man running, or at least leading the nation during this time of kind of geopolitical instability, where we've got Russia invading Ukraine, we've got wars popping up in the Middle East, potentially Israel is now going to invade southern Lebanon to attack Hezbollah following the skirmishes on that northern border, and that's amidst already the war in Gaza. And already we've spoken previously about strikes between Iran and Israel, which took place for the very first time ever. And so ultimately with tensions also heating up in the South China Sea, many are starting to question whether a person of this age, a person which is already starting to struggle to speak and direct themselves properly when it comes to walking the right way, getting off stage without assistance, many are starting to question whether that should be the person running the nation. And ultimately it's Democrats which are now asking those questions. It's not just the Republicans, and that's where the issues are really starting to grow for Joe Biden, who is now looking to find any single way that he can kind of find the support that he needs from the Democratic establishment to keep him there for the presidential nomination. And some have kind of said that that's a very selfish attempt for him to hold power, because it is starting to seem like there really shouldn't be Joe Biden running for the Democratic presidential nomination, but ultimately that's his choice, and that's what we're now seeing play out. So this is obviously a very important topic for us to cover because it affects the economy, it affects the way markets move as a result, and their respective economic policies, whilst both are kind of setting themselves up for a growing deficit, a growing debt level, growing debt burden for the US. Ultimately, both of their economic policies are different, and therefore whoever's leading the polls affects markets differently. That's generally why we cover this topic. With these moves being part of a wider move by the Biden campaign to maintain his position whilst following his poor performance in the debate between him and Donald Trump, with his recent campaign efforts including a joint strategy call for major contributors, since some of the senior members of the Democrats called for him to drop out the race, he has now also hit crucial constituencies on Capitol Hill, and has also focused his efforts towards winning back over the left-leaning media and donors. As a part of his letter to the Democrats in Congress, he noted that more than 14 million voters had chosen him as the Democratic nominee, and any weakening of that mandate would only make it easier for Trump to get ahead and win. Following the letter, he attended an interview on the left-leaning cable TV news network MSNBC, in which he once again reiterated that he was not going anywhere, with him telling donors later that day that he was in to the end and was ultimately going to beat Trump. He struck a surprisingly confrontational and aggressive tone when he also said that he was getting frustrated by the elites in the Democratic Party who were pushing him out. The questions over Biden's health, though, do remain, especially following a New York Times report which showed that a Parkinson's expert visited the White House 8 times since last summer. So that is, a kind of very important thing to end off there, to note, as obviously the kind of health of Biden is the kind of key concern. And if we've seen such deterioration in his health over, his past term, where we can really listen back to his speeches, his arguments and debates with Donald Trump back in the last presidential election cycle, ultimately seeing that degradation just makes you question what could happen now over this election, or at least this kind of period or presidential cycle. And so that's the kind of question that is now being asked. Definitely keep your eyes on this topic, though. Very interesting one indeed. The next article to talk about, though, is to do with Sequoia Capital, the kind of topic of venture capital, which of course is also another topic that we frequently cover, but of course not as frequently as, maybe US politics. Now, Sequoia Capital's former China unit has now raised a new $2.5 billion fund. This marks a move which defies the fundraising freeze that has recently hit rivals. Now, we haven't really spoken about the fundraising freeze. More so, we've been talking about private equity and their key issues to do with kind of offloading their assets, deploying capital even to ultimately return cash to investors and, use the investor cash that is now being provided to them by new investment. And that's kind of been the key issue in private equity. And ultimately, that issue has seemingly been mirrored as well with the venture capital scene, as they both, whilst they don't follow the same business model, obviously, ultimately they work in similar markets and, sometimes, are kind of working in lieu with the companies that they would acquire and sell and that kind of thing. And so ultimately, what I'm trying to say is, they've really been struggling in the private equity scene with the kind of ability to deploy capital and ultimately also, exit those kind of assets that they're holding. And a similar kind of situation is now being seen within the venture capital scene. So that's why this kind of topic is very interesting to note. This is why this specific article is interesting to note, is because despite the kind of troubling times that we're in, regarding the markets for the kind of alternative investment scene, Sequoia Capital's former China unit is now raising $2.5 billion in their new startup fund. So obviously there's still the investor demand, despite the kind of weakening conditions that maybe you could argue for the kind of the markets at the moment. And this is very interesting to see, and could of course kind of hint to us that possibly things are on the up and up now, and possibly we could now start to see the markets, as we've been hinting to, we could start to see the markets easing. We could start to see venture capital firms and also private equity firms start to find it easier to deploy capital and ultimately also offload their assets and return cash to investors, rather than using these grey markets or these unique lending techniques and that kind of thing. And so that's why this is of course a very interesting article to note. Now, this latest fundraising round now makes this fund the largest fundraising held by a privately owned VC firm in China in the past year. Its founder Neil Shen is widely considered to be China's most powerful tech investor. It's also important to note that this new fund is backed by the Hangzhou city government and is also a number of private and state-owned insurance companies. That said, it is still smaller than the $9 billion Hongshan fund, which raised capital in 2022, but ultimately has failed to deploy the required capital. And that's kind of what I was hinting to earlier on there, with the kind of issues that the alternative investment scene is facing. But still a very interesting article there, and one to kind of keep on your mind. Next thing to talk about, though, of course, after covering all of the stuff on the articles, is of course the charts. And like always, we're beginning on the US 30. And whilst over the past few weeks, past few days, we've really not seen much action on the US 30 with all this around ranging motion, this more so consolidation rather than ranging, to be fair. Ultimately, yesterday we saw some very interesting action with, of course, the price of the US 30 spiking to the upside and reacting to this higher area of liquidity that we of course noted out, and we also hinted to of course price reacting to, and that is now what we've of course seen play out, with price spiking to the upside and then selling off once more from that key area. Now, the last time of course we saw price shoot up into that zone and then sell off from that zone was of course around the 24th of June, also on another Monday. And so this price action is of course very interesting to note, and kind of continues to represent and tell us basically that there's a clear range that has formed within this kind of period in the market, where seemingly the US 30 is in a position where the macroeconomic conditions are just not kind of enabling this kind of growth that maybe we're seeing with key tech driven indices like the S&P 500, which we covered in yesterday's weekly market briefing, which of course is pushing all-time highs, continuing this all-time rally, whereas with the Dow Jones we're seeing this kind of stalling price action. We're not seeing much momentum, and that possibly that's because we're not seeing the right economic data for that, but also possibly that's just because the financials for these kind of big industrial powerhouses just aren't there at the moment to enable this growth. So definitely keep your eyes on the US 30, as it is interesting to now see that price has react to this higher area of liquidity, and now price is back around those areas which price was consolidating around through the entirety of the end of last week. So definitely keep your eyes on the US 30. It is interesting to see how things are playing out. Next to all about though is the dollar, which of course, in yesterday's weekly market briefing, we were talking about how the dollar had been selling off over the course of the entirety of last week, really, after price, of course, retraced and reacted to this 78.60 Fibonacci retracement level, and since then price had sold off quite significantly. Now, to start off the week, what we've essentially seen is, price just somewhat break lower and then retrace back up into this key liquidity zone that we noted price was sitting at to end off the week last week, and so ultimately there's still not too much to say, as no key moves have been made to the upside nor downside. But it is interesting to see that price is now gravitating to this key liquidity zone, and it does of course beg the question of whether we could see price utilize this key liquidity zone for a key move to the downside or swing swing to the upside. And should we swing back to the upside, of course we have these higher areas of liquidity around the 105.5 level, which could be the level that price moves back up to. And as for the downside levels, I mean, at the moment we've not got anything marked out until the 104.16 level, but possibly we could note out the 104.5 level as a key area where we've noted key accumulation before. So that's the kind of key areas that we could be noting out for price to gravitate to next. But definitely keep your eyes on the dollar at the moment. Very interesting price action, as of course we are receiving an incredible amount of economic data this week, and as a result of that, as a result of all that US economic data or US economic news, that's all going to be factored in and priced into the dollar, and therefore we could be expecting a great deal of movement throughout this entire week, even throughout today, since we are receiving Jerome Powell's testimony, which will be very interesting to listen to. Next talk about though is Euro USD, which kind of mirroring, or ultimately representing the inverse of what we're seeing on the dollar. Price has of course swung to the upside over the course of last week, actually over the course of the entirety of last week, and ultimately has started off the week by somewhat selling off from this higher area of liquidity that we noted in yesterday's weekly market briefing. So price has somewhat reacted to that level, still not in a very significant manner, not like a large sell-off, just a kind of small reaction to that level and slight movement to the downside. It will be interesting to see whether we do see a full-on retracement now taking place after reacting to this level and forming what is essentially a double top, but we will have to wait and see. Next talk about though is pound yen, which is now forming this kind of flag, this kind of rally at these these all-time highs basically for pound yen, multi-year highs, and ultimately price reacted to that 38.20 back ending off last week, and now to start off the week we've kind of built out this flag, this bullish bearish flag possibly, that is now kind of somewhat shaping up on the 4 hour, but it's far more clear to know of course on the 1 hour where we're seeing this kind of upward rally but still kind of ranging motion. So definitely keep your eyes on pound yen. It'll be interesting to see whether we do reach that minus 27.2% Fibonacci extension level for today if we do continue this move to the upside. Next talk about though is Bitcoin, which is now in this kind of range that is seemingly formed. Now we did note of course in yesterday's weekly market briefing that price had reacted to that 50% in key liquidity zone to end off last week, and we were saying how possibly we were going to see a continuation of that and possibly price moving all the way down to that $50,000 Bitcoin level, which is of course a very low level, but seemingly to start of the week price has marked that kind of $54.3 thousand a Bitcoin level as the bottom of the market, and as a result now price is kind of forming this range within this period of consolidation. So definitely keep your eyes on Bitcoin. It's just kind of interesting to see how we've seen this slow decline and then these ranges do end up forming. Next talk about though is gold, which has reacted to these higher areas of liquidity. So we didn't see price make its way all the way up higher to around the $2,400 level, a gold level, and ultimately we saw price more so sell off from around the 2,390 level, from where we've seen price now sell off quite significantly, as you can see here, back into this period of consolidation that we saw form to end off last week before we saw that massive surge to the upside, of course, in price. This is of course once again very interesting to note because we are receiving Jerome Powell's testimony today, as well as numerous other Fed official speeches. Add to that the great deal of US economic data that we're also receiving this week. The gold is of course a very important one to watch, especially when we then factor in the potential war in the Middle East with Lebanon. So lots to think about there with gold, but it will be interesting to see whether we can then once again emerge above this key liquidity zone, this key resistance level like we did to end off last week. And that's the kind of key question to keep on your mind. If we do, of course, break lower, this kind of bottom of this period of consolidation is the kind of area which price will be looking to break below and then possibly make its way down to these lower levels of liquidity and previous resistance. Lastly to talk about though is of course oil, which has retraced to start off the week. It does seem like, with price somewhat retracing to end off last week, but not really. And ultimately, to start off the week, we've continued that retracement to form a serious retracement now to the downside. If we kind of extend this fib out to better understand the market, ultimately price is now broken below that 50% Fibonacci retracement level and is currently sitting on that 61.80. So it will be interesting to see whether price will now utilize that area of liquidity to move to the upside, especially with the potential war in the Middle East, as I've noted many times now. That's all to talk about on the article. On the charts though, lastly to talk about is the economic calendar, where we're receiving some very important economic data or economic news points, but not lots of it. Now first you're receiving the British retail sales data, followed by the Aussie consumer confidence figure, and then numerous Fed official speeches. Now the most important thing that we're receiving today though is of course the Fed chair Jerome Powell's testimony, which will be very important to listen out for and will affect markets greatly, especially those US dollar related assets. So definitely keep your eyes on all of that. But that's all to talk about on the economic calendar. We've got lots in the articles, lots in the charts, and lots on the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Very great one. See you later. Bye.